Welcome to Breakout Investors. We are excited to be speaking with the management of Crexendo, ticker CXDO, specifically the company's president, Doug Gaylor. Joining me on today's call and leading QA is Sam McColgan. This call is being recorded on March 5th, 2026, and will be distributed via the Breakout Investor YouTube channel and our Substack network. Supporting materials and post-call analysis will be provided on the Breakout Investors collaboration app, available at the app stores and at breakoutinvestors.com. The application and much of the research content is free. We also invite you to join our WhatsApp community, which is linked to in our YouTube profile. So let's get the call started with me handing it over to Doug for a brief presentation with Q&A to follow, led by Sam. Doug?
Great. Thanks a bunch. Appreciate it, Josh, and really excited to be presenting to the Breakout Investor community again. So really exciting week for Crexendo. So I'm going to dive right in. I've got a couple of slides that we'll run through. And then after that, we'll open it up for some questions and answers. So here, and safe harbor statement that you've probably seen every time you go through one of these presentations. So obviously, hopefully you guys already know what we do, but just a quick snapshot of what we do. We are a unified communications as a service company, but we offer it in two different flavors. We offer it in a retail flavor and a wholesale flavor. The wholesale flavor is our software as a service platform. So we offer a unified communications as a service software platform to other unified communications companies that will use that platform as the foundation for their UCaaS offering to end user customers. And so when we think about that aspect of our business, it's the fastest growing part of our business. It grew at 28% organically last year, which is phenomenal. And it's growing that quickly because we are the third largest platform provider in the country right now, behind Cisco and Metaswitch. Cisco bought BroadSoft about 6 years ago. They're the number one platform provider out there. Metaswitch is the number two platform provider out there. And Crexendo is the third largest platform provider out there. Currently, we have 240 licensees that use our platform today and basically white label it as their own to go sell it to their UCaaS customers out there. So that business is growing tremendously because there's been a lot of challenges in the environments with number one and two. Cisco's BroadSoft platform hasn't been really updated to stay with the latest and greatest technology. It's really kind of an afterthought for Cisco nowadays. They bought BroadSoft 6 years ago and really haven't done much with that division since. And so a lot of the BroadSoft licensees are not very thrilled with the future direction of that platform. We estimate that Cisco's probably got about 1,000 licensees out there. Just last year, we brought on 4 Cisco BroadSoft licensees over to the Crexendo platform. So we're extremely excited about that. Metaswitch used to be owned by Microsoft. Microsoft decided they were going to end of life their product 2 years ago, and then they did a complete 180. And last year, at the end of the year, decided to sell that platform off to a company called Alianza out of Salt Lake. That's created a lot of fear, uncertainty, and doubt with their licensees as well. We estimate about 800 licensees that have the Metaswitch platform out there now. And again, a nice bellwether for us because we brought on 6 Metaswitch licensees last year that moved over from the Metaswitch platform to the Crexendo platform. So we're seeing a lot of opportunity created by the number one and number two players out there, really not developing or giving a lot of future applications to their platforms. And that's why we're the fastest growing platform provider out there. And as number 3, we've really got our eyes set on number 1 and 2. And then on the other side of the equation, our retail offering is our telecom services segment. We sell our UCaaS offering directly to end user businesses. And in that area, we're competing against companies like RingCentral and 8x8 and Vonage and others. We really excel there with our focus on customer service and support. And so we're continuing to take market share from them and continuing to grow at twice the industry rates on the retail side of the house. So with that, I'll jump into a little bit more about the financials of the company and then talk about an exciting acquisition that we just did this past week. And then we'll open up to some questions and answers. So if you look at the company today, the way we're set up today is that we've got the 2 segments. We've got the wholesale segment and the retail segment. The wholesale segment today, as I mentioned, is our fastest growing segment. Grew at 28% organically last year in 2025. And if you look at it, that makes up 44% of our total revenue. So we just finished the year and announced our earnings on Tuesday. Had $68.1 million in total revenue for the year. And so really exciting about what we're seeing in the trends there. So 44% of that revenue came out of the wholesale side of the house. And again, we've got about 240 plus licensees that sell our platform. There we added 14 new logos. So that's 14 new licensees just in 2025 alone. And we're seeing tremendous traction there. Those 240 licensees, as they continue to grow, they're very sticky customers. We've got virtually no churn in that division. And when these UCaaS companies buy our platform, basically they're building their whole company around our platform. So it's a very synergistic relationship with them. And they're committed to us, and it's a very sticky relationship long term. And those licensees, some of them have been with us, upwards of 10, 12, 15 years. In fact, the acquisition we're going to talk about in a little bit was one of our licensees. It's been a licensee for over 14 years. The retail side of the house, about 56% of our 68 million in total revenue. That's driven through a direct sales force, an inside sales force, and reseller agents out there. We've got over 225 reseller agents out there, and that area continues to grow as well. One of the areas that we're really excited about is our relationships with master agents or technology service distributors. That's growing at a very rapid pace as well. The technology service distributors are kind of independent brokers out there. We've got relationships with quite a few master service agencies. We just announced one in December or in February for a relationship with App Direct, which is one of the large master agents out there, and seeing great traction there. Those master agents contributed a 46% year-over-year increase in our total sales on the retail side. So again, a lot of tremendous momentum there. Combined between the wholesale and the retail sides of our business, we service over 7 million users on our platform today. That's a tremendous number, and that number has grown consistently. Last year, we hit the 6 million user milestone in February, and then we hit the 7 million user milestone in October. So extremely excited about the growth that we're seeing out there. So how does that translate into dollars and cents? So a really strong fourth quarter that we just wrapped up. Again, we announced earnings this past Tuesday. You can see our 10K that was just put out on Tuesday as well. But just to hit the highlights of the annual numbers, 68.2%. That was a 12% organic growth rate. We've had 10 consecutive quarters of GAAP income, which is almost unheard of in the technology sector today. Most companies are out there and leveraged and losing money. We've had 10 consecutive GAAP income quarters. We've had 29 consecutive non-GAAP net income quarters. And you can see those numbers pretty tremendous. So 5.1 million in GAAP income, that was up 300% year over year. 11.4 in non-GAAP net income, that was up 148%. And just a really, really strong focus on managing the business to the fundamentals. Our revenue itself has increased organically 182% over the course of the last 3 years. So we're seeing tremendous traction and tremendous growth within the organization. Just a couple of quick KPIs, and we'll talk about the acquisition, and we'll open it up for some Q&A. So we break out these key performance indicators on both segments of the business. On the software solutions, that's the wholesale side. Those 240 plus licensees, they pay us on average about $7,300 a month to use our platform. Some of them are smaller, some of them are larger. So, our smallest licensees are a couple of $1 million in revenue. Our largest licensee is north of 100 million in revenue, and so our largest licensee is actually a little bit larger than we are collectively. And so that's a great snapshot of what our licensee base looks like: small, medium, and large. But they're very, very sticky. Again, our churn there is less than 1% annually. It's 0.05% on a monthly basis. So we see virtually no churn because, again, once they make the investment to put our platform in, it's a very committed relationship, and they're building their whole business around our platform. About 67% of our revenue out of that division is monthly recurring revenue. So it's a very predictable revenue stream. And really high gross margins. The gross margins improved from 2024 to 2025 in that sector. And we continue to see improvement in gross margins and expect to see continued improvement in gross margins in that sector. The retail side, our average customer out there is about 19 stations. So if you look at it, we get about $352 per month for an account that is using our system. And those are small and mid-sized businesses. And again, about 84% of the revenue is on a monthly recurring basis there. We see a little bit higher churn, but still probably the lowest in our telecom sector from all of our retail competitors, because when you're talking about selling end user customers, you've got small and mid-sized businesses, you see a little bit higher churn as they go out of business or maybe merge or get acquired. So again, great numbers there, and again, all pointing in the right direction. So the last two slides, and then we can open up for questions. We've talked about our growth, and so as Sam can relate, he's been following us for a little bit over a year and a half, 2 years now. And so as we've talked about our growth, we talked about organic growth, double-digit organic growth, double-digit profitable organic growth. But we've also talked about inorganic opportunities. And so we've talked about our 240 licensees being our stocked fishing pond for future acquisitions. And we're really excited about the fact that we announced on Monday morning this week a very exciting acquisition for us. This is an acquisition of one of our larger licensees, one of our longest tenured licensees. We acquired a company called ESI S-Tech out of Dallas. Tremendous opportunity for us. They did approximately 26 million in revenue in 2025. So combined with our 68 million and their 26 million, that puts us by the end of this year with organic growth right at that $100 million run rate that we've been talking about for the last 2 years. So if you've been following our presentations and our talks over the last couple of years, we've talked about our growth, but we've talked about our goal to get to that $100 million run rate by the end of 2026. And with this acquisition, we're dead on target to reach that goal. Nice contributions from an EBITDA perspective. The numbers, as we highlighted in our presentations, is that these numbers are unaudited. We were hoping to have their audited financials completed by the time of the acquisition so we could have pro formas out. But unfortunately, this was a company that hadn't done GAAP accounting. A lot of private companies don't adhere to official GAAP accounting regulations, and so we've got to get audited financials due to the materiality, the size of this transaction. We should have that audit complete within the next 2 to 3 weeks, and we should have pro formas out hopefully within the next 4 or 5 weeks. But projected, very strong EBITDA margins that'll contribute to our margins. As we looked at all of these opportunities over the last couple of years for inorganic acquisition opportunities, the nice part about having 240 licensees in our stock fishing pond is that we can be very particular. And so we waited, and a lot of investors were like, hey, when are you going to make the next acquisition? The last one we did was about 3 years ago with one of our licensees, and that was very accretive as well. And we've been holding the line that, hey, we're looking and waiting for the right opportunity. We found the right opportunity with ESI. They currently support about 6,200 retail customers, about 75,000 seats on our platform. They've been in business for about 38 years. They've got about 85 employees. So we think that this is just a tremendous opportunity for us. And we think that the valuation that we got on it was pretty spectacular. A purchase price of 35 million, consisting of about 27 million in cash and 7 million in Crexendo stock. So not dilutive or not very dilutive at all. We've got about 31 million shares outstanding. I think we issued 1.15 million shares in this transaction. And so, the valuation of that was about a 1.25 times revenue, which is an extremely strong valuation from our perspective. So, the exciting part is that, this is just a tremendous opportunity. The combination of these two companies is going to be tremendous. They've got a great management team. They've been growing organically themselves. So, again, this is just a great opportunity for us. And we really feel that between the two organizations, very strong together. The last thing I'll just highlight before we open it up for questions is what's driving UCaaS growth right now. So again, we've got great growth organically. We've got great growth inorganically. But the next big opportunity out there is the opportunity for AI and what that is doing to influence our technology out there. We currently have multiple AI solutions that we've been selling for the last year. Applications like call recording. Call recording's been around for a long time, but with AI, I can do sentiment analysis. I can do a lot more with call recordings with artificial intelligence. But we're most excited about our recent announcement in January with our Crexendo AI Receptionist Orchestrator. So we're calling it Cairo. So the Crexendo AI Receptionist Orchestrator is basically just that. It's an AI receptionist that allows the AI solution to answer all of your incoming calls, answer frequently asked questions for businesses, set appointments, cancel appointments, get you to a live body if needed. If you think about the typical small or mid-sized business out there that's answering all their telephone calls, now we've got an AI solution that can answer all those calls for the business, answer frequently asked questions, schedule appointments. And so think of it, I'm out here in Arizona and we're getting to the warm season here. So if your air conditioning is broke and you've got 110-degree day out here in Phoenix, you need to call an AC company to get it fixed immediately. And if you're calling an AC company and they've got one or two people answering the calls and your call is ringing consistently for 8 or 10 rings, you're going to hang up and call the next opportunity. Or if you call and you get put on hold for 2 or 3 minutes because they're handling somebody else, you're going to hang up and call the next opportunity. So with an AI receptionist, I can answer that call. I can say, hey, how can we help you? Yeah, I've got a Trane air conditioning and it's not working. Great, we service the Trane air conditioning. We can get somebody out there today if you'd like. Could we get somebody out there at 2 o'clock for you? And if you say yes, I can go ahead and schedule that appointment. It can send out a text message to the technician on duty that here's your next appointment. And so if we're talking about how a small and mid-sized business runs, now with an AI receptionist, I can handle 10, 15, 20 calls at a time. I can set appointments consistently with an AI receptionist where I can't do that with one or two people answering the calls. So we think this is going to be a game changer for us. One of the slides I showed earlier showed that we get on average $350 per month from our retail customers out there. The AI receptionist could add upwards of 25 to 40% more recurring revenue off of that single account by giving them a tool that they want, that they need, and it's going to make them more efficient, more productive. So we're extremely excited about that. UCaaS is going to be a game changer in our industry. A lot of businesses are talking about, how AI might negatively impact their business. For us, we're talking about how AI is going to positively impact our business because all of our customers are chomping at the bit for AI type solutions, and we bring those to the forefront. So just in conclusion, we're extremely, extremely excited about where we are today. Our growth getting to $100 million run rate by the end of this year, profitable growth, clean balance sheet, virtually no debt on our balance sheet today. We did this transaction with cash on hand. We've been managing the business extremely well. Our free cash flow has been tremendous over the last 2 or 3 years. So if you look at the business today, we think we're a diamond in the rough, and that's why Sam suggested we have a follow-up call with the Breakout investor community because we've been executing on all cylinders. Sam's excited about our future trajectory, not any more excited than I am because I'm thrilled about where we are and where we're going. So with that, Sam, let me stop sharing my screen here, and we can open up for some Q&A.
Thank you, Doug. That was great. Great recap of what's going on in the story for Crexendo at the moment. And great, we've got a full room of investors excited to hear more and ask more questions. This will be an open Q&A session. I think since there's a lot to talk about, we can go by topic. But if anyone wants to at any point ask a question, either put it in the chat and I'll ask it for you, or you can just kind of raise your hand and I'll make sure to call on you. Yeah, thanks, Josh. Yeah, and I can call on you as well, so you can come off mute and ask it yourself if you prefer. In terms of topics, I was thinking we can start generally on kind of organic growth. We can talk about competitive landscape, maybe some of the new partnerships, and the AI receptionist. Then we can talk about the M&A side, the recent deal, and potential future M&A. And then maybe we can talk about kind of cost, what's going on the cost side, particularly you didn't mention in the presentation about the kind of migration of data center services, so we can touch on that. Yep. And then any other questions that come to anyone's mind, we can also go on to talk about. So I'll kick us off on organic growth. In terms of the competitive landscape, you mentioned in the presentation that the kind of 1 and 2 players in the space have for some time been looking a little shaky. You've been getting licensees come over from them because, well, I guess because they haven't been investing enough in their business and you seem to have a superior product and service and cost. Has any of that changed? So let's say over the last kind of 12 months, you've had a certain number of licensees come over. How do you think about looking forward? Do you expect that to accelerate, just kind of keep at this sort of steady pace? And what are the drivers of what you might expect?
Yeah, no, great question. So that part of our business is the software solutions segment of our business. And as I highlighted, it grew at 28% organically in 2025. We brought on 14 new licensees, of which the high majority came from Cisco and Metaswitch. So when we look at the opportunities out there, again, Cisco, they bought BroadSoft. It's been kind of a smaller component of their overall business. They haven't been focused on it. A lot of the BroadSoft licensees have some discontent because prices are going up, services lacking, and there's no future development. So when you talk about how AI is revolutionizing what we're doing out there, these older platforms, the Cisco BroadSoft platform and the Metaswitch platform are older platforms, and there's not a lot of my sensor went off, so I'm not waving at you guys. I'm turning my light back on. So when you look at what's going on out there, the Cisco base is a little bit discontented, and so if they're looking for an option, we're going to be the best solution for them. Same with Metaswitch. When Microsoft announced end of life on the Metaswitch platform, it really sent a shockwave through that Metaswitch community. Then when they sold the company, the new company reached out and said, "Hey, don't leave us. We got great plans." But the company at the bottom has their own platform, and so they're still trying to figure out which platform is going to be the lead platform. It's very difficult to manage two platforms. We used to do it. That was a good segue into Sam's question about migration. We used to have two platforms before we bought the NetSapiens platform 6 years ago. And so we're extremely excited about where we are today because we only have the one platform because it's just too difficult to manage, engineer, and support two platforms out there. Allianz has got their old legacy Metaswitch platform. They've got their own platform. They've got to pick a lane, and a lot of the Metaswitch licensees have been waiting for some direction. And if they don't see the direction that they want, they don't see the AI solutions coming out that they need, they're going to have to jump ship. And when they jump ship, we're the best solution for them. On top of that, all of our licensees, not all of them, but the majority of our licensees are doing extremely well as well. I mentioned that we had 40 upgrades out of our licensee base. So out of our 240 licensees, 40 of them did significant upgrades in 2025. They're very sticky customers. When they grow, they've got to buy more services from us. When we come out with things like our AI receptionist, they have to buy that from us. That's a tremendous revenue generating. So not only are we talking about increasing our retail customer spend by 25 to 40%, but if I can take my licensee spend from the average that we showed earlier of $7,300 a month up to $83 or $10,000 a month or whatever that number may come out to be for an individual licensee, that's a tremendous win for us. And so we continue to see tremendous momentum. Our industry is ripe for growth because still about 35 to 40% of the businesses out there still have legacy, older premise-based equipment. They haven't moved to the cloud yet. It's not a matter of if they move to the cloud, it's when, because technology is going to force them to move to the cloud. Muted out, Sam.
Sorry. Just in terms specifically about the competitive landscape, though, it has been the way that you described for some time. And I wondered if you're seeing that just continue or if you're kind of more excited going into 26 or less excited.
Yeah, I'm more excited. I think that the opportunity is these number 1 and 2 players continue not to enhance or develop their platforms. It's only a matter of time before their licensees get disgruntled enough to say, I got to make a change. A lot of licensees won't make a change. Their philosophy is, hey, if it's not broke, don't fix it. And if I'm not looking to expand my business or grow my business or use new technology, they're probably fine. It's the old adage of, hey, if you've got a car that still works and it gets you from point A to point B, that's fine. But when it starts breaking down, you start having issues. Eventually, you say, hey, I got to get out of this car and I got to get a new car. And so, we're just waiting patiently for these licensees to make the decision that they can't afford to run their business on an older, unsupported, or undeveloped platform. And that happens continually. So we had, as I mentioned, nearly 10 licensees that moved over from BroadSoft and Metaswitch last year. We don't see that train slowing down. We see a tremendous opportunity for these licensees to continue to migrate over. And then we see a lot of the smaller licensees out there that have other platforms that are smaller platforms that are growing. A lot of the smaller platforms out there, the Asterix platforms, the 2600 hertz UMA platforms out there, they don't have a lot of growth capabilities. So when licensees outgrow those platforms, they have to look for an alternative. And again, we're the fastest growing and the best alternative out there. So I couldn't be more bullish about the opportunities for our software solution segment to continue to grow.
Great. Could you talk a little about the recent partnerships you've signed? Maybe AppDirect or Altigen. Are those kind of special in any way? Remarkable, remark-worthy?
Yeah, they really are. So, if you think about it, I'll start with Altigen. So, those 14 new licensees that we added last year, one of them was Altigen. So, many of you on the Breakout Investor session here might be familiar with Altigen. They're a small microcap stock. They've had their own unified communication platform that they've been using for years that they developed in-house. But they kind of ran into some growth challenges that I highlighted earlier that, when you have your own platform or you have a platform that doesn't have as much capabilities to grow, and you've got to continue to have engineering support to build that, and then you got to figure out how to add AI and all these applications into it. A lot of these businesses can't afford to continue to invest in a platform internally, so they have to look for a platform that's going to grow with them and allow them to focus on sales and marketing as opposed to engineering and development. And that's exactly what happened with Altigen. Altigen looked at where they were and what they needed to do to grow to the next level. They evaluated our platform for quite some time and finally made the conclusion that, hey, a partnership with Crexendo and putting our platform in to build for the future for their UCaaS offering was a win-win. It was a win for them. It was a win for their customers. And ultimately, it was a win for us because we got a new licensee and a new partner out of it. So as we look at that, that just kind of solidifies why we think that we're the best platform out there. A industry veteran that's been around for 30 plus years that looked at all the options out there and said, hey, we've got to hitch our wagon to Crexendo's or hitch our horse to Crexendo's wagon. That was a great win for us. The other one that you mentioned was not a licensee, but on the retail side was a partnership that we did with AppDirect. AppDirect is a technology services distributor or master agent that they used to be called. These technology service distributors are organizations that have a plethora of products that they offer to their independent agents. AppDirect has over 10,000 independent agents out there selling technology solutions, and those technology solutions include security and network services, but most importantly for us, unified communication services. Our largest partner today is a master's agent technology service distributor called Telarus. But secondarily to that, we look at AppDirect, who's in a same type genre as Telarus, coming on strong with us. We did their sales kickoff back in January, got tremendous momentum, are seeing nice sales and tremendous opportunities coming in from that relationship. So when we look at what we're doing to grow the business, we're growing it organically by having key partnerships out there that can bring in more business for us. And again, when we talk about the retail side of the equation, we excel at customer service. So when these independent agents have a choice of representing Crexendo or RingCentral or an 8x8, RingCentral and 8x8 are plagued with customer service challenges out there. And so we highlight the fact that we continue to lead from a customer satisfaction perspective in G2.com. G2.com is kind of the industry preferred or industry leader for third-party independently verified surveys for software and technology companies. And we're continually ranked at number one for telecom providers, where RingCentral, I think, is down in the 40 or 50 range. We're number one. And so when we go out to an AppDirect and talk to all their independent agents out there and they say, why should we sell you over a RingCentral or an 8x8? It's, hey, you're putting your reputation on the line when you bring in a partner. And if we do a great job, you shine. And if somebody does a bad job, you don't shine. And so these independent agents are very aware of that. And if they've got burned once or twice by a RingCentral or an 8x8 or a Vonage or whoever, then they're looking for a better alternative. And when they put us in and we have a flawless execution and the customers are thrilled, we get more opportunities from that. So that's why our telecom technology service distributor area grew at 46% last year because we do it better than anybody else.
Any reflections from your from your annual user meeting at the end of the year?
Yeah, so each year in October, we have a user group meeting. And this year it was down in Miami. We had a tremendous meeting. We had record attendance, over 600 people that attended our event in Miami in October. We had record sponsorship. The sponsorship comes from our partners out there. We've got over 41 partners in our ecosystem vendor program. These are partners that develop applications to sell to our licensees and to our retail customers. So it's kind of like the App Store for Apple. So we've got our own ecosystem vendor program that all of these folks that develop applications or solutions for UCaaS can sell it to our licensee base through our programs, and we get a revenue share off of that. That program started in its infancy a year and a half ago, and now it's up to 41 partners that we get a rev share on. So that's growing tremendously. The excitement that came out of the UGM this year in October from all of our licensees was off the charts. Very electric, very excited. I'm a big believer in that a rising tide raises all boats. And so when we're continuing to be successful and our licensees are successful and we share best practices with them at these events, they go back and they go out and kick ass and grow their business even more. And we're seeing that in these upgrade orders and in the excitement from our licensee base. So yeah, that was a great meeting for us, and we're looking forward to having our upcoming one here this October in Austin, Texas.
Brilliant. Well, let's get on to the AI receptionist. You've spoken a little bit about it already, kind of qualitatively, but how big of an opportunity is this for Crexendo?
Yeah, we think it's a tremendous opportunity. So between our retail division and our wholesale division, we currently support over 350,000 businesses. So think about that number, 350,000 businesses today rely on Crexendo either directly or indirectly. So our AI receptionist was just released in January. The momentum and excitement behind it is off the charts. Because if you think about most small and mid-sized businesses, the small and mid-sized businesses out there are looking at how do they do things better? How do they grow their business? How do they do it more effectively, more efficiently, and more productively to be able to grow their business? And so that's where we are today with the AI receptionist. The AI receptionist allows us to go into those small and mid-sized businesses and say, hey, for a very affordable price, and our three models start at $49, $99, and $149. So for a small or mid-sized business, for a $100 a month investment or $150 a month investment, they get a solution that can answer their calls 24/7, as many calls as they get at any given time. It can set appointments, it can answer all these frequently asked questions, and it can do the job of 1, 2, 3, 4 individuals. And if I need to speak to a live body, no problem, I get to a live body. But if you think about it, small or mid-sized business, the person that's answering the calls, they have 3 or 4 other jobs to do. And now if I can have those frequently answered questions answered by our AI receptionist, answer and set appointments, now that person can do things more productively within their business. So when I go to a business and say, hey, right now you're paying somebody $40,000 a year to answer the phones and deliver the mail and do some other things, what if you were able to redeploy that person to do more productive things within your business? Because we're going to give you an AI receptionist that will answer all the calls for you and do the same thing that Sally receptionist is doing, but do it more effectively, more efficiently. When you have a receptionist answering your calls at your business, well, guess what? They have a bad day, they have a sick day, they got to go get coffee, they got to talk at the water cooler. An AI receptionist doesn't do any of that. The AI receptionist is on call 24/7, never has an attitude problem, always answering your questions, always doing things professionally. It's a great tool. And when I go to a business and I can tell them that, hey, you're paying me $350 a month now, and for an extra $100 a month, you get this great tool, and they look at it and say, that's a no-brainer. And for us, if I can increase my 25% revenue off of my average revenue per user or per account, that's a home run for us. So we just started selling it in January. We've already sold a tremendous amount just in a short period of time. We've done mailers out to all of our existing customer base. They can try it for free on a trial basis. So we think it's going to be a game changer for us. Just to put it in perspective, RingCentral beat us to the punch with an AI receptionist a few months prior to when we released ours. And on their earnings call recently, they were talking about tremendous adoption rate within their customer base. So we expect to see very similar trends within our customer base.
Just a quick follow-up question.
Oh, go ahead.
Yep, just a quick follow-up question. So you said you sent out mailers to all of your existing customers on this. What other plans do you have in terms of like a sales push for it?
Yeah, absolutely. So, we do a constant drip campaign with our customers, letting them know new features, new applications. We've got an inside sales group. They're all assigned to individual retail customers. So their goal is to call customers and talk about these applications. So, it's a full-on press because we think this is a game changer for us. And it's not only a game changer for us, it's a game changer for the customer. A lot of these customers, these small and mid-sized customers, they're managing their business. If you've got a small law firm, you're managing your law firm, you're managing your doctor's office or your dentist's office. You're managing the business, and so you're not thinking about, hey, what can my phone system do for me? So when we contact them and say, hey, you guys have been a great customer, I want to introduce you to something that you might be interested in, and we do a demonstration of it. We can set up a trial on their system and let them try it out. They don't have to go live if they don't want to. They can just play around with it in the background. And the overwhelming success we've had with those offers has been off the charts. And so that constant sales focus, Josh, is critical for us because we want our customers to know that, hey, this new technology is something that they can take advantage of. And we're getting an extreme high take rate on those conversations.
Excellent.
Obviously, the AI receptionist is going to be one binary thing, which people take or don't take. Hopefully, many customers do take it. What about kind of future product development? Do you see kind of more similar AI products you can offer to these customers to keep providing value to them?
We do. So, when you think about the cool part of AI is that, AI can continue to help develop itself. We did not develop our AI receptionist in-house. We partnered with one of the leading AI performance companies out there, Gartner recognized company called OneReach. And so when we look at that development, they developed that solution for us. And already we've gotten a lot of requests to expand that. And so we're constantly developing new applications. I mentioned our ecosystem vendor program. We've got 41 vendors in that program today. A lot of our licensees have developed their own AI solutions. And so if they develop an AI solution that we like and we want to roll out, we bring it into the program and we offer it to all of our licensees. So the nice part is that we don't have to develop these things in-house. We've got plenty of application partners that can go develop it for us. And our system is the most open platform out there. With APIs, we can basically integrate with just about anything. So as an example, right now, we don't have it ready for market yet, but we're developing something that's going to be an AI assistant. So, I can literally, touch my phone and say, hey, ask my secretary to bring me copies of the 10K report that we just printed out. And the AI reception or the AI assistant will go out there and buzz my assistant and tell them what to do. I can have the AI assistant say, hey, how many calls have we had in our customer service group today? And can you give me an example of one or two of my calls from my customer service agents? I just want to listen and get a snapshot of what's going on today. So the AI assistant can do that. It can look up all the database. It can go out and bring that information to me quickly and efficiently. And again, if you talk about a small or mid-sized business, they may not have any idea how their business is running. But I tell you what, if your business runs on communications with potential customers and prospects out there, and you're averaging 100 calls a day, and all of a sudden your calls have dwindled down to 30 calls a day, you probably want to know that. Or if your calls were averaging 100 calls a day and now you're averaging 150 calls a day, you probably want to know that. So we're developing those applications today. And so for us, AI is going to be a generator of opportunities because we see no limits on what applications can be developed into the platform.
What are the if you get the 25% revenue uplift on average per user, what is the gross margin on that revenue?
Yeah, the gross margin is extremely high. So the gross margins on our retail sector today is in the 58 to 60% range. We're going to have even higher gross margins on that application because again, we co-developed it with OneReach, but we've got extremely high margins on that platform. So if I go sell it for $100 a month, that's an extremely high gross margin component. So I anticipate our gross margins continuing to go up. And that's a good segue, Sam, into your question earlier on, can gross margins go up in either one or both of our segments? And the answer is yes. On our wholesale segment, we have committed to partnering with Oracle Cloud Infrastructure, OCI. So we made a commitment that we would have all of our data centers consolidated and moved over to OCI on the cloud by the end of the first quarter of this year. And I'm pleased to announce that we're ahead of schedule on that. We just shut down our 3 data centers here in the U.S. and are decommissioning them as we speak. We've already decommissioned 2. We've got the third one being decommissioned next week. And so that'll save us an average of $45,000 to $50,000 a month by not having those additional data centers. So if you think about how we grow our gross margins, we do it by being more efficient and more productive. So our goal when we announced our partnership with Oracle Cloud Infrastructure a year and a half ago was that, hey, we're moving everything to Oracle. We had a multi-million dollar, multi-year commitment with Oracle. And so that commitment is a year and a half into the process now, and we're going to see tremendous cost savings there because by shutting down these legacy data centers, that's $50,000 average per month. That's upwards of $500,000 a year, if not more. That's going to go straight to the bottom line. So we're excited about increasing gross margins there. On the retail side, the gross margins clicked up 4%. Quarter over quarter from Q3 to Q4 because of some of the efficiencies we're seeing with data center consolidation and some of the efficiencies we're seeing with some of our software applications that we're marketing now that allow us to see margins start increasing.
Right. Well, let's switch over to, sorry, the M&A side. Your recent acquisition, obviously one we've been waiting for a while, but are very happy to see it happen. You've passed on many opportunities leading up to this. Why now, and why this particular opportunity? What about it in particular stood out?
Yeah, so you're exactly right. We have passed on opportunities. The last acquisition we did before the announcement this week was 3 years ago, and that was one of our licensees in Kansas City called Allegiant Networks. We bought that organization. It was a great fish that we pulled out of our stock fishing pond. And then we took a year off to get all the synergies out of that business. And then 2 years ago, we said, okay, now we're ready to start looking again. And we looked at a couple of big opportunities 2 years ago that were in the $25 to $30 million range. And after a lot of diligence and a lot of hard work, we decided, hey, these weren't the right fit, either financially or culturally or whatever the case might be. We did a lot of diligence. We decided, hey, this isn't the right fit. And a lot of shareholders were like, hey, we're waiting for you to make an acquisition. We're excited for you to make an acquisition. When's one going to happen? And we said, hey, we're going to make an acquisition, but we're going to make the right acquisition. If it's not the right fit, if we don't feel like it's a cultural fit, if we don't feel like there's a financial fit, if we find that their numbers might have been misleading that they were representing, we walked away from those opportunities. In fact, some of the opportunities we walked away with, we're still out there, and some of the opportunities we walked away with got bought by other competitors, and we'll see how it works out for them. But we were very focused on making the right acquisition that was going to be accretive and a good fit for our organization. And we also wanted something that was going to be a game changer for us. We had, I had mentioned that we were looking at opportunities at the end of last year, this being one of them, ESI being one of them, but we had a couple of smaller opportunities we were looking at as well. A $5 million opportunity is a great acquisition for us, but it doesn't get us to that $100 million run rate that we wanted to get to. So, we were very patient to wait for the right fit. ESI, we had talked to ESI a few years ago, and it wasn't the right timing then. but their owner was ready to exit the business. Their owner's um, elderly man, north of 80, and he was looking to take his chips off the table. He had done a phenomenal job over 38 years growing the business, and it was time for him to retire, and he wanted to sell the business. A few years ago, when we first looked at it, he was kind of interested in selling the business, but not quite. Now, I think as a few more years passed, he was like, "Okay, time for me to put this into good hands." And it was important for him to put it into good hands as well. A lot of these folks that have the licensee base out there, they've built this business from scratch. So this is a great example. This guy built a business for 38 years. It's been his baby, and the last thing he wanted to do is sell it to private equity, where they were going to terminate all of his employees, or sell it to somebody that was going to dismantle the business or not grow the business. We were very, very focused on, hey, this is why this is a good fit. We see it as a tremendous opportunity for us to continue to grow your business and our business together. And that made him feel comfortable that we were the right partner for him. They went out, they had a broker, they had multiple bidders and suitors for this opportunity. And we were the winner because I think it was culturally the right fit for his people. I think financially, the right fit for both of our organizations. And so now that we've got that under our belt and moving on, we feel like we'll be at that $100 million run rate easily by the end of this year. But the nice part is that of the 240 licensees that we have, it's an endless fishing pond. I still have multiple opportunities, and I've had multiple calls from our licensees in the last couple of days since we announced that say, hey, what do I need to do to get in line for the next one? So, we don't have any shortage of opportunities. And again, we can be very selective. So, if we continue to execute the way we plan on executing, my next goal is to get to that $150 million run rate within the next 2 to 3 years. And I think we can easily do that by continuing the organic growth and inorganic acquisition opportunities.
Brilliant. We're coming up to about 10 minutes until the end of the call. So I just encourage anyone, if you wanted to get your questions in before I fill up all the time with Doug, please do raise your hand or put it in the chat. In terms of your M&A fishing pool, are you seeing any changes in kind of valuations and what these companies are asking for?
Yeah, we are. I think that the reality is that everybody thinks their business is worth more than it probably is. And what happened in our industry, 2 or 3 years ago, is that everybody had delusions of grandeur that their business was worth 4 or 5 times revenue, and the reality is that it wasn't, and that's why some of these discussions stalled 2 years ago for us. Is some of these bigger opportunities were private equity or venture capital backed, and there was a lot of debt on their books, and we looked at some opportunities that were in the $20 million range that had $30 million worth of debt, and we couldn't even get to a valuation to cover their debt. And so that's why these conversations didn't lead to an acquisition, is because financially, we said, hey, here's what we value a business at. In fact, ESI, when we do the customer acquisition cost of that transaction, the customer acquisition cost of buying ESI is actually less than the customer acquisition cost for us to go out and get a individual retail customer. So for us, that's a no-brainer. I can get 6,200 customers immediately for less than what it would cost me to go out and individually try and bring them on our retail side of the business. So when we look at valuations, this opportunity we bought, as I mentioned, for 1.35 times 2025 revenues. If we look at their forecast, it might be as low as 1.25, 1.3 of forward-looking revenues for 2026. That's an extremely good valuation for us. We're not going to venture outside of our comfort zone. If somebody wants 3 times revenue, that's probably a non-starter, and that discussion doesn't go anywhere. But there's a lot of businesses out there that may get to the point of, hey, I got to sell my business. And if they're looking to sell it and there's not a lot of buyers out there, and we're the perfect fit. Again, most of these licensees we've known for years and years and years. We go to these user group meetings that we have in October. They show up, we show up, we go out and break bread and have discussions. And so, that's how a lot of these acquisitions come to fruition. They start, a year or two prior with early discussions, and then as an owner or the management team decides that hey, we can do better things or bigger things by being part of a bigger organization, when they're ready to make that decision, we're ready for them. So I couldn't be more stoked about the opportunities ahead of us, because I truly feel out of these 240 licensees at any given time, even if only 5% of them are looking for an exit strategy, that's 10 or 15 opportunities that I can weave my way through and find the best ones for Crescendo to continue our growth. So when I talk about a $150 million target in 2 years, is that doable? I mean, you've been talking to us for a while, but 4 years ago we were a $16 million company, and now we're a $68 million company, and going on $100 million. So it's very doable, and we're going to execute it properly.
Obviously, acquiring companies from your licensee pool is inherently lower risk. Is there anything that you do worry about with a large acquisition like you just did?
Yeah, I mean, the best part for us is that they're on our platform, so there's no migration. And there's cost synergies right out of the gate. So they're on 3 facilities-based data centers right now. So I talked about our 3 data centers that we're shutting down and saving us $45,000 or $50,000 a month as soon as we get those shut down at the end of this month. ESI has 3 data centers themselves. And so our goal is to move their instance over to our OCI infrastructure. We'll be able to shut down those data centers. They've got term contracts on those data centers. So our goal is to turn them down as their contracts come up, because it's a early termination fee if we don't. So we probably just run those through to the end of their contracts, which are a 9-12 month time period. But when those contracts come up, we'll see great cost synergies there. So when we look at ESI, there's tremendous opportunity for growth. They've got a very, very loyal reseller base themselves. They've got over 200 resellers that have been selling their product. And many of these resellers have been selling their product for 15, 20, 25 years. What we really liked about ESI is that the tenure that they've got with their executive management team and all of their employees is off the charts. The 3 executive or 4 executive managers that are coming on as the president of that division has been there for 15 years. Their COO, that'll be now their SVP for ESI, has been there for 21 years. Their SVP of sales has been there for 22 years. So you don't see tenure like that in the telecom sector. And that rolls down to all of their employees. So their technicians, their customer support folks, their salespeople, they've got tremendous tenure. And they're all excited about the fact that now they're part of a larger organization, and that helps their story to go out and sell more business. Because, as a salesperson, if you're selling as a small privately owned company, that's one story. But now they can talk about having 7 million users. They can talk about being the fastest growing organization in the or telecom sector for gas. And now they've got a much better story. So we think it's going to be a tremendous uptick all the way around for us.
Final call for questions from the audience. I don't mind. I've enjoyed asking all the questions myself. A final one then. You've mentioned kind of a longer term goal, 150 million revenue. What other things do you look forward to the most? What will have gone right to just make you feel like, if you're looking back in a few years, like what went right in the business, other than it sounds like a few acquisitions to get up the revenue, like what do you think you have the most influence over, and what are you most excited about?
Yeah, I mean, our goal is to be best of class. We don't have to be the biggest. I mean, RingCentral is doing $2 billion worth of revenue. Zoom's doing $6 billion worth of revenue. So we don't have to be the biggest. Cisco, with their whole organization, is one of the largest companies in the world. We're not trying to be the biggest guys out there. I want to be best of class. I think we're best of class today, and we're only going to continue to do better there. So if you look at the wholesale side of the house, our software platform, it's the fastest growing platform out there for a reason, because number 1 and number 2 are stuck in the mud, and we're continuing to take market share and grow that side of the business and grow it impressively at 28% organic growth for the year. Nobody's growing at 28% in our sector today and in any part of their business. So that's tremendous for us. On the retail side, I don't look at having to be number one. I don't want to say, hey, I'm going to replace RingCentral as the number one guy, or Zoom, or 8x8. Those guys are much bigger than we are, but I'm taking market share for them as well. So, all I'm looking at is, how do I continue to grow our business and grow it organically and grow it profitably and have great returns for our shareholders? I mean, if you look at our stock, when we first started talking, Sam, it was $2 or $3, and here it is at $6.50. I still think it's undervalued where it is today because, again, we're executing. Our telecom sector has been hammered over the last 3 years. So it's all cyclical. I think that the telecom sector is really ready to bust out. I think that the microcap sector is really undervalued at this point. And so I think as businesses look at, hey, where's the next shining star? I think we're it. I think we're going to continue to grow. We're going to continue to grow organically and inorganically, and we're going to do it profitably, and we're going to return to our shareholders. So, all my excitement is the fact that there's tremendous opportunity in our space. We're looking forward to taking advantage of that opportunity. I've seen a lot of failed M&A in the telecom sector because companies try and go out there and be everything to everybody. We're not doing that. We're focused on what we want to acquire and how we want to acquire it and what it's going to do to our business. So if you look at other companies in the past, that have derailed, it's because they bought stuff that didn't fit. And we're only buying things that just make us a better company. And so that's our whole goal. When I look at buying our licensee base, that's the perfect fit because nothing out of our licensee base is a shock to.
Doug, thank you for coming and chatting with us today. It's a pleasure as always, and it's been really useful. I hope the audience has enjoyed listening to you. I certainly think this is a very exciting time for Crexendo. As you said, I followed you guys for quite a while, but I do feel like with data center migrations, with AI receptionist, with new acquisitions, just like on many, many fronts, it seems like things are changing. So I thought this would be a good time to get you on. So thanks for coming to chat.
Yeah. Thanks, Sam. Thanks, everybody. Greatly appreciate it. And you guys have my contact information. Feel free to reach out if there's any follow-up questions. Glad to address them for you.
Great. Thank you.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers and not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.